Hello guys, welcome to the channel. This video is going to be a old gem as I will be going a step further on how I build a strong trade bias that helps me secure higher probability trades. As such, I will implore you to see it through till the very end. Here is a NZD card trade I took last week. I will be using as case study. Currently, this is still running, and then we're just a few pips shy of my take profit. I'll quickly clear up my chart so I can get down to the analysis. I'll start off from the monthly time frame. Clearly, we're very bearish on the monthly time frame. As you can tell, we are making what? Lower highs and lower lows, and then lower highs. Price making the most recent swing low, currently undergoing what? A pullback. And so we had a counter trend trading opportunity on NZD card. Looking at the monthly time frame, we clearly traded back to what? To test previous lows. More like key levels, somewhere around 0.78 thousand. So looking to the left, you can clearly see how what the level aligns perfectly well. From previously, we had what? We had lots of price reactions for every time price came into this level. You can clearly see what the level acted as what? A resistance. Then we had a break of the level. We came back, we tested the level, we acted as a support, and then what? The last time we came to that level was sometime around 2012. And then fast forward to what? 10 years later, we're back to the very same level again. So price came into what? A monthly key level, 0.78 thousand. So I'm trying to build myself what? A case study here. So we can clearly see price retests. Price retesting monthly key levels, 0.78 thousand. That's the first thing we notice. And then taking this down to the weekly time frame. There is something I like to do every time price comes into key levels. and that is compare. So now this is the cash, guys. When price trades back to key levels, you want to look out for similar candlestick pattern forms right at the level in comparison with the previous time price was at the level. The more similar the candlesticks that form on the level, the more likely price is going to what? Give the very exact outcome it did as previously when it tested the level. Okay, now let me make this more clearer. So clearly we're coming into what? A monthly key level, 0.78 thousand. And then what? We want to now, what I then want to do is what? I want to compare the kind of candlesticks printed at the very level, but that of the candlesticks that were formed the previous time, what? Price was at the level. So we're going to look at what the previous time price came into this level from the weekly time frame. What did we get to notice? Notice what? We had what? A bearish candlestick that closed below the level. And then we had what? We had a doji, more like a weekly pin bar. And then followed by what? A bullish engulfing candlestick. A bearish candlestick breaking below the level, closed below the level. And then we had what? We had a pin bar, followed by what? A bullish engulfing. These three candlesticks clearly what? Forming what we call a morning star. Previously when we tested the level. And then what? We're having to see price what? Give us the very exact same what? Candlestick patterns it did previously when it got to the level. Some 10 years ago, when price got to the level. We're having to see price what? Come into the same level and give us what? The very exact same candlesticks. So we had what? We had a bearish candlestick. And then we had what? We had a doji candlestick, a pin bar, followed by what? A bullish engulfing candlestick, closing the right what? Back above the level. So previously, we came and closed what? While the weekly candlestick closed below the level, a bearish candlestick. Immediately we had what? A pin bar, doji, and then what? A weekly bullish engulfing candlestick, closing what? Right back above the level. Guys, you can clearly see I'm not making this up. It's very obvious. The charts pointing what? Very similar candlestick patterns as it did previously when it tested the level. You can compare evening star candlestick formation here with that of the one currently that formed when price tested the level some 3 weeks ago. And then what? Having see what price printed what? The very exact same candlesticks as it did the last time it came into the level. The close of the engulfing, what then did we notice? We notice what? Price traded back to what? To test previous structure. Previous structure being what? Previously, we had this as what? As a support broken. A broken support becomes what? A new resistance. So you can see as soon as we add that what? That bullish engulfing candlestick close back above the key level from the weekly time frame perspective, sometime 10 years ago. You can clearly see that was May 2012 when price came into the level, which traded back to what? To test the previous structure, weekly structure. Previously was a support, then we had a break, now becomes what? A resistance. So having to see price give me the very exact same what? Candlestick patterns from at the same level again now, tells me that what price will give me what the exact same outcome. So what then was I looking to do? Having C price what prints the very exact same candlestick patterns right on this very same key level it did as previously, some 10 years ago. I was looking out for what price to give me what same outcome. And by that, I mean what price coming back to what previous weekly market structure. And this would be what? This would be the previous weekly. $0.78,000. Sorry about that. $0.8,000. Yeah, so you can clearly see the level was previously what? A support, and then what? We had a weekly break of the level. And now we're expected to what? Retest the level. A broken support becomes what? A new resistance. So as soon as I add this bullish engulfing candlestick close right back above the key level, this confirms that what? Price is likely going to trade back to what? To the previous weekly structure, somewhere around what? 0.8,000. Which previously acted as what? Support on 2 occasions. Broken now becomes what? A weekly resistance. See how doing this one thing has clearly shown me where NZD card is most likely headed for. And then all I need to do is what? Scale down to smaller time frames to look for what? Trade confluences in line with the weekly directional bias. So having the weekly bullish engulfing candlestick close right back above the level, I confirmed what? That the next level stop for what? For NZD card would be what? 0.8,000, or should be more like what? A counter trend opportunity. All I needed to do was scale down to the smaller time frames to look out for what? Potential buying opportunities in line with what? The pullback to retest what? Previous weekly market structure. And that's for the weekly time frame. Here we had what? Price retesting monthly key level 0.78,000. What weekly time frame looking very similar as previous retests of key level. So we had price retesting monthly key level that we can see from the monthly time frame. We had what? Weekly time frame looking very similar as previous retest of key level 0.78,000. What we're having to see what? the very exact same candlesticks that formed previously, sometime around 2012 when price came into the level from the weekly time frame. We're having to see what the very exact same weekly candlesticks printed currently at the very most recent retests of the level. We're having to see what the weekly morning star, the weekly morning star candlestick formation, which is a reversal candlestick pattern. And whenever it does forms, it tells us that most likely what the market direction is going to head to the opposite direction. Then now this takes us down to the daily time frame. Then from the daily time frame, what can we see from the daily time frame? From the daily time frame, clearly we were creating series of lower highs and lower lows. As you can see, we had a lower high, we had a lower low, we had a lower high, we had a lower low, we had a lower high, we had a lower low, we had a lower low, we had a lower high, we had this being the what? Most recent lower high. This is the high that led to what? This swing low. So we had this being the most recent. This is the high that led to what? The lower low, the most recent swing low. So for as long as price stays below this high, we're clearly what? We're clearly still very much in a downtrend. But then what did we get to see? Having seen price printed us what? A lower high. We had what? A lower low, and then what? A higher low. And then we had what? A break of structure. You can clearly see this daily candlestick clearly what? Broke and close above what? Above not just the key level, 0.78,000. Clearly what? We had the previous swing high at that level. And then we're having to see what? A break and what? A daily candlestick close above that level, signifying that what? We are somewhat kind of having a what? A structure shift from what? From a downtrend to what? To an uptrend from the daily time frame perspective. So clearly what? The daily time frame perspective has shifted from what? From a downtrend to uptrend. So we have daily time frame, structure shift. From bearish to bullish. So yeah, this is me trying to what? To build my case study. Why do I need to get in on what? On the trade. As much as possible, I need what? I need to get enough reasons to what? To get in on a trade. And this is what I do for every time I what? I get into any charts. I get to what? I get to write down what? The um uh, um the confluences I get to see on the charts. And then this, at the end of the day, will influence what? My taking a trade at any given point in time. So what the daily time frame structure shifts from bearish to bullish. And then what did we have to see what? Clearly, we're having to see what? Previously, we had what? A resistance from the daily time frame. Previously, this was a resistance. And then what? Because we are now above it, we're broken. A broken resistance becomes what? A new support. So at the break of this level, I was expecting price to come and retest the level where I would look out for what? Potential opportunities what? To get in on the long trade in line with what? The weekly bias. So what a daily structure shifts from bearish to bullish. So we had what? A break and retest as seen from the daily time frame. Break and retest of market structure, where we had what previously this level level. We had what previously we had our daily resistance at the level, and then what we're having to see price clearly break above that level. So we had a structure shift, and then what? A break of market structure. Broken resistance becomes what? A new support. So we're having a break and a retest. And if you guys have been following my videos for the longest period of time, you know very well my strategy is all about what? The break and retest. I like to have what? That break. And then what? I don't just trade at the break of a level. I will then wait what? For a retest of the very same level. And then when I get what? The candlestick confirmations, the retest of the level, that's when I get in on what? On the trade in line with what? The bias. Then also clearly, I don't know if you can see this already, but it's very obvious there. We're having to see what price give us what? A daily inverse head and shoulder pattern. This is not a very perfect head and shoulder pattern, but then you can clearly see we're having what? Our left shoulder, we're having our head, and then what? The right shoulder. And then we have what? A breakout of what? Of the neckline of the inverse head and shoulder pattern. You can see my very strong reasons why what? Eventually, my taking this trade becomes a very high probability trade. We have a daily time frame. Clearly, you can see what a daily time frame inverse head and shoulder pattern. With the neckline clearly broken. And then we're having to see what? A retest of what? Not just a market structure, a retest of daily time frame, a retest of the neckline, as seen from the daily time frame. Have a retest of the neckline. And then this is where I scaled down to what? The 4-hour time frame to get in on what? A nice entry at the retest of what? The monthly key level, also a psychological level, 0.78 thousand, having to be what? A previously broken daily resistance now turn what? Support. Also having to see it be what? The neckline of what? Of the head and shoulder pattern, of the inverse head and shoulder pattern as clearly seen from what? From the daily time frame. And then we're having to see what? The trend is also what? In our favor. Clearly what? The daily time frame has shifted from bearish to bullish. So am I looking out for what? For a buying opportunity from this level, even though this is what? A counter trend opportunities, but then what? I have what? So many strong reasons why what? This trade is expected to play out what? As planned. Moving down to the 4-hourly time frame from where I had my entry on. And this, yeah, clearly, this is that daily confirmation of what? Of structure shifts from bearish to bullish. This movement is that. And then where the retest. I'm not just retesting what? Monthly key levels. I'm not just retesting what? Psychological level 0.8 thousand. I'm not just retesting what? Daily structure previously, which was what? A resistance now becomes what? A support. You can see from the 4-hourly time frame what? How this level has held up price. You can see what? We came into the level held price. We came into the level a second time. And then we're having to retest the level a third time, expecting to see what? The very same reaction of the level. And then what? We're also having to see what? Price retest what? We're having to see price retests the 4-hourly time frame. Retest of EMA of the exponential moving average. So we're having to see price retest what? The exponential moving average. And because we are above the exponential moving average, is expected to act as what? As a dynamic support. So we're having so many confluences at this very exact level why we needed to what? To jump in on that buy trade at the retest of this level. So I got in on the buy trades somewhere. Yeah, somewhere around 0.7 8,000. Had a very tight stop loss on this. And then, like I said, from the monthly time frame, from the weekly time frame, we're looking to target what? The previous weekly market structure, which was previously what? A weekly support, and then we had a break of the support. Now we're expecting the level to act as what? A weekly as a resistance. So yeah, you can see my thought processes and my journaling for what? My getting in on the longs on NZD card. And this is basically what I get to do what? For every setups I take. So I get to see the setups meet a certain number of requirements before deciding to get in on what? On the trade opportunities that the setups presents me. So yeah, thanks for taking heed to my advice and staying till the end of this video. Do well to smash the subscribe button, like this video and share. See you in the next video, guys.